welcome. You're watching Money, Money, Money. I'm Sumaira Abdi. Ultra high net worth individuals in India today account for over 1 lakh of our 1.25 billion population. In fact, some estimates say that by 2018, their combined wealth could touch 380 lakh crore rupees. Now, some of this incremental wealth creation is going to come because of the pickup that we're seeing on the ground in terms of investment into industry, manufacturing, and the push being given by the new government. But a lot of this is also going to come because of prudent financial planning and wealth management. So what are the instruments that are going to drive this wealth creation, and how do you protect your assets? We're going to ask Anshu Kapoor, who's the head of wealth management at Edelweiss. We also have KK Mishra, MD and CEO of Tata AIG General Insurance. And joining in today to give us a first-hand account of how different the needs of the HNI really are, we have with us Pradyumna Jajodia, President and Executive Director of the Warden Group. Thanks so much, gentlemen, for being a part of our show. In fact, Pradyumna, I want to begin with you. You know, we've seen the last few years which have been a bit of a drag, you can say, but things are picking up now. Do you think your investment philosophy over the last few years and now, do you see any change in it?
Definitely, I think sentiments have improved, and there is going to be a complete change in asset allocation approach from a debt-heavy portfolio to maybe more equity now.
All right, so you're ready to overhaul things?
I think so. I'm willing to take that bet now, you know, with the comfort that I have a stable government in the center who's pro-capitalist, and is already, we can see some moves from the government in the last 3 months that are very positive for the industry and for the country. I think I'm willing to put my money where my mouth is.
All right, and Anshu, but tell us, he's willing to put up his money, change his asset allocation, but would it be very different from that if another, say just another retail investor, or is it just that his, the amount he's putting up is just exponentially more?
It's not only about the amount of money or capital that he is going to invest. The needs are very different, Sumaira. For example, a retail investor, it's more about cash flow management. Financial planning is what we call it. So income, expenses and goals, how do you get there? And you draw up a plan. For an investor like him, it's a lot more about asset classes that are available, amount of concentration, liquidity, complexity, risk management. So it's not only about cash flow management. So the avenues that are available and the decisions that he can perhaps take are very, very varied.
All right, then Mr. Mishra, like Anshu says that products have to be tailored to the HNI. Can insurance really get that personalized? I mean, what is it that you can offer your HNI client that you're not offering anyone else?
Well, HNI believes that he should not be hassled with the fine prints or details. So it's more to do with their lifestyle, it's more to do with their worth, and more to do with what type of investment they have done other than what they call about equity and all. But you know, most of the HNIs, they invest in art, they invest in jewelry, they invest in yacht, they invest in Boeings. So it all depends what type of investment they are doing. And we are there because I can't replace the sentimental value, I can't replace their intrinsic value, but what I can replace that if, God forbidding, something goes wrong, can I have the same type of painter, same type of painting available in the market? We do that.
All right, I'm sure that's touching a chord with many people out there, but Pradyumna, I only heard you say debt and equity, and now Mr. Mishra has raised, art, wine, I don't know what else, yachts. Would you be willing to bet on all of those things now? Well,
some of the items he's mentioned are depreciating assets, and some of them are appreciating, like art, for example. A yacht and a Boeing, I don't know if that's an investment, a prudent investment or not, but from the art point of view, I think I've been thinking about it for a long time now. But I haven't really got the courage to go ahead and invest anything in art, simply I think because I don't understand that enough. So I'm definitely open to it. It's an asset class that I want to add to my portfolio. In fact, we're doing a lot more than just debt and equity. We're doing some real estate, we're doing distressed assets, we're doing some other stuff as well, exotic stuff as well.
That's quite honest actually, but Anshu, have you ever had to turn down people who said that, I want to buy this exorbitantly expensive painting or a yacht? Do you ever turn people down and say that don't go for it?
Several times. I think when markets are good, all of us tend to get carried away a little bit. And all of these items that Mr. Ji mentioned, there is a demand for that. In fact, if I remember 2006-07, some of the global investors would invest in a luxury and lifestyle index. There was actually an index created of constituents which were like luxury and lifestyle. So these things do come in vogue, but as wealth managers or advisors, I think it's our job to protect as well as to grow. So we have to be cautious whether the expertise is available or not.
But also, Pradyumna mentioned that he's investing in stressed assets. Is that really an investment?
It is a financial investment. It is not a business decision. It is a financial investment. See, ultra high net worth individuals are now exposed. Distressed assets globally is a very, very large asset class. And there's an opportunity in India, given the amount of stress that's on banks' balance sheets. There is a little bit of incentive for them to move these assets away, and there is a regulated mechanism of asset reconstruction companies to come in and buy those assets. So there's not enough capital available, but returns are still there. So it's a well-considered decision, and those products are now available.
Okay, and while we're on the subject of all that is lavish and fancy, Mr. Mishra, how does something like this actually get insured? How do you calculate a premium on it? How do you put, value on things which don't have, intrinsic value, maybe very different from what their real value is?
Well, to be honest, first thing is when we enter in, with such contracts and we meet people like Pradyumna, we always look at what's his background and what he is investing and where he is investing. And then there are valuers available in Mumbai, Delhi, Calcutta. There are valuers available for all these things. Okay, it's a very niche market, so they are not publicly known, but we know them. And when we enter, first thing we do that the value which my customer is telling, is it the right or not the right one? So the valuer itself is to be agreed together, and then the value which comes we agree is more known as agreed value. But God forbidden, we have been in this business for 4 or 5 years. Most of the clients are not public, and there have been claims, and there has never been any hassle on this.
If there was a claim, what would be the procedure? I mean, would it be a normal go to the police station? Because I don't think HNIs would want to be...
Not at all, because I said that is more of an agreed value policy. We agree to certain terms and conditions in the contract itself, and we abide by that. There is no question of asking question, why did you lose a diamond ring? If somebody has lost, somebody has lost, because we know that there was a diamond ring. We know that it was a normal wear. We know these things do happen. But again, I'm again mentioning very clearly, this has to be taken care at the time of insurance, not at the time of claim.
Now, I'm sure, as is with most HNI families, you have a lot of property or land that you've inherited. Would you still consider making fresh bets into, commercial real estate, or would you look at, buying more residential properties?
I think that would mostly be driven by the market conditions in both space, I think. See, Resi in India has always done quite well. In fact, it's a safer bet to play between the Resi and commercial. Having said that, I personally believe that the commercial market in India will grow faster than the residential market going forward, simply because I think it's been beaten down quite a bit. And India is unique in the sense that the commercial market is trading at a deep discount to Resi, which is not the case in London, Hong Kong, New York, or any of the developed markets, I think. So there's a catch-up to be done on the commercial side. Going back to the question about inheritance land vis-a-vis investing more, I think inheritance land, unless there is vacant land that can be developed into commercial or residential and monetized, one should look at adding some real estate in their portfolio. I think it's a good, steady, especially if it's income yielding, like a pre-leased asset, for example. It gives you a steady income of 7-8% a year, plus the 5-7% capital appreciation that one expects the property prices to go up every year. So I think it is prudent to have some real estate in your portfolio. I think Anshu will be adding more value to that question, and maybe he can give his thoughts as a banker.
Yeah, absolutely. I do agree with the investment thesis. See, commercial real estate today in India is lying buying nifty pre-May 16th levels. So the appreciation has still not taken place because there's still some amount of supply overhang. Till that gets sorted out, there will be good opportunities available in the commercial real estate market. That is one. The other big factor that will influence the prices is the REITs regulation. So as more and more foreign funds come into the real estate sector through REITs, there is likely to be a yield compression, which will result in the prices going up.
All right, so on that note, what we'll do is take a very quick break, but we're not done just yet. When we return, we're going to tell you how HNIs do their estate planning and what are the factors that they need to keep in mind. Stay with us, we'll be back in just a bit. Welcome back. You're watching Money, 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 and today we're discussing how the needs of the HNI is different from retail investors and what are the financial tools that they use. With us today, we have Anshu Kapoor, Head of Global Wealth Management at Edelweiss, KK Mishra, MD and CEO, Tata AIG General Insurance, and also with us is Pradyumna Jajodia, President and Executive Director of the Warden Group. Pradyumna, once again, first to you.
Sure.
Estate planning is a huge subject in itself, and for people who have inherited a vast amount of wealth, it must be a gigantic task. Have you taken steps already? I mean, do you have a will in place? Do you have succession plans in place?
So I'm 37. I'm still young to kind of formulate a will for my successors. But yes, I think in the family level, my father has already embarked on that, on the steps of estate planning. I think in India, this is often ignored. Nobody really pays attention to estate planning. However, last couple of years, I think the government announced its intent to come up with inheritance tax. Now imagine a situation where an estate of, let's say, 100 crores is transferred from generation X to generation Y, and there's a tax of 30 crores on it, at 30% interest, 30% tax rate. Where will that individual get that 30 crores? Either he's wealthy enough to take it out from his investments and pay that, or he will need to sell those assets to raise 30 crores, which defeats the entire purpose of transferring the asset from one generation to the other. Therefore, I think prudency is now to plan your estates, to ring fence your estates in such a way that they are tax efficient and can be transferred from one generation to the other.
See, in India, a will can be challenged by anyone. There are only few structures which give you total assurance that the wealth will actually get transferred to the next generation. So for that, there's a lot of thinking that is needed. And usually in India, a large chunk of businesses are family owned. And there are complexities within the families, and they take time to resolve. So one aspect obviously is the tax piece, the other is the certainty or the ring fencing, and third is to protect the family or the inheritors from any risks that the business may undertake. So it has to be in a way a limited liability structure that does not put the entire wealth at risk. So it's always best to get started now.
And what are one of the methods that you advise? I mean, would you be advising HNIs on things like philanthropy?
Absolutely. I think a lot of our clients now want to give to society. They may or may not be involved fully with the project, but there is a certain desire to give.
You know, Mr. Mishra, there's so many dynamics at play normally, with asset creation, preservation, and so on and so forth. Are there any add-ons that you give to your insurance policy? I know you told us about, the various kinds of items that you would give. What are the add-ons that you could provide?
That's what he said rightly, one line, the risk adjusted. What exactly is the risk they are looking at? First thing, we know the risk appetite of the person, okay, how much he can himself take on. If he is not in a position to take on, naturally whatever is left out, those are the add-ons which we will provide. Fundamentally, as Anshu rightly said, it starts with the will of the person, what he wants to invest, what he wants to give as a philanthropy, and what he wants to keep as a charity, and then decide that, okay, whatever asset I have created or I am going to create, up to this I am okay with it. For him, losing a car may not be an important thing, but losing something will be very difficult. So there we come into and say, okay, this is your risk appetite. Beyond that, I'm here, and that we provide the add-on.
So when you're deciding the asset allocation for an HNI, what goals really matter for them?
They do actually. See, 5 years back or maybe 10 years back, returns were the only condition that an investor would look at. How much return am I going to make? Then the focus has shifted now to not only returns but risk management. Right? What is my risk adjusted return? Return, absolute returns. See, for someone like him, he is not benchmarked to Nifty or Sensex. So if Sensex were to go down -10 and his portfolio did -5, I don't think he's going to be happy.
Sure.
So one, the focus is shifted to absolute returns. So his benchmark, for example, could be inflation plus 5% or GSEC plus 3%, and every client is different.
Right.
And also the asset location varies in that sense. The needs could be different. For example, he may need a lot of asset protection, what Mr. Mishra referred to, or he may also need asset transfer strategies. How do I equalize wealth?
Right.
So how do I transfer assets from one generation to the next generation? How do I ring fence and protect? All the risks they are taking is in the business.
Right.
What if something goes wrong in the business? Business is the source of all wealth. How do you ring fence that wealth? So there are a lot of related issues around wealth that has been created, and also now you add globalization. So most of high net worth individuals are globalized. They are running global businesses. They also do want to access the global markets. India is only 2.5% of world market cap.
Right.
So now there's a huge desire, but not enough means to invest and diversify in hard currency assets. So someone like them, because they run a global business, rupee dollar is a very, very crucial decision factor, because India is an high inflation country. Traditionally, for the last 30 years, rupee has depreciated about 5% compounded. So how can you protect a dollar hard currency wealth? A lot of our customers have kids going overseas, so there needs to be hard currency assets overseas to fund their education, living, and so forth. So as you can see, the goals are still there, but they're very, very different from what you call a retail investor.
True, actually, and you know, for Mr. Mishra, for someone who has such diverse assets, would you recommend that they insure, you know, individual assets like individual pieces of art or jewelry, or do you think, you know, more of a comprehensive policy would work better?
Well, I will always say that there cannot be all size fit everyone. So it has to be individually, he has to look for it. Yes, we do agree for a complete bouquet also, but it's always better to go for his individual assets, because as he rightly says, something in US or something here, and if you want a dollar parity, it has to be looked differently than what you are doing in India. So these things have to be looked very carefully, and normally we do a lot of due diligence on this, and we do advise what is right for them. At the end of the day, it's the customer choice, but it's a specialized area and it needs time and some understanding of the issue.
All right, so it's been great fun, gentlemen, but we have to wrap it up over here. I'm sure, you know, there's lots more that we can discuss, and at some point in the future, we will. Thank you so much for being a part of our show. Anshu, you have to stay on. There are more fun and games that's left on the show. We'll take a very quick break. We'll come back in a bit. On the other side is our viewer call-in segment, Can I Afford It? Welcome back. You're watching Money, Money, Money. If you're looking for a bit of extravagance in your life, well, we're the people to call, and our expert will tell you if you can afford it or not. Joining in first up is Suyash Mehra, who calls in. Hi.
Hi, my name is Suyash Mehra, and I'm 30 years old, and my current income is 50,000 per month, and savings are, my savings are 4 lakh till now, and I want to buy the new Apple Watch when it comes out.
Okay, so we all know pretty much how much an Apple Watch is going to cost, but how are you going to pay for it?
I'll pay for it with my savings. I don't have any insurance, but I'll pay for it with my savings.
Anshu, what do you think? Do you want to approve it?
Well, Sumera, I think Suyash is young and doesn't have insurance. Perhaps it will be prudent for Suyash to go for insurance first at his age. The term plan will be very, very effective and cheap, perhaps, and after that he can go ahead and indulge in the Apple iWatch.
Alright, so for now it's denied. Perhaps wait for something jazzier to come out in the near future. Thanks very much for calling in. Up next we have Rahul Pandey, who calls in from Delhi. Hi Rahul, what's your question?
Hi, this is Rahul Pandey. I'm a businessman from Delhi. my income's around 80,000 and my expenses per month comes around 45,000. I have adequate insurance and I would like to install a jacuzzi at my place.
Wow, that's pretty extravagant. So how much is this going to cost you and how are you going to pay for it?
It's going to cost me around 56,000 and I wish to dig into my savings of rupees 11 lakh.
Alright, Anshu, what do you think?
Well, go ahead, Rahul. Go ahead, indulge. Be your neighbor's envy and get that jacuzzi.
Alright, so have fun and I hope it brings you much joy. Thanks very much, Anshu, for joining in, and viewers, do remember to keep writing to us. Send your queries to money@network18online.com. You can also find us on Twitter. Write to CNBC TV 18 News. You can use the hashtag money. You can also log on to YouTube to catch all our previous episodes. We have to take your leave now, but we'll see you next week.